Hello traders, today is the 22nd of February. My name is Neville Hornsey, market analyst YouTrading, and today I'll be taking a look at what's happening in the markets. So I'm going to start with the YouTrading.com Forex heat map. You can see the bottom left-hand corner is green, top right-hand corner is turning red. So for me, at the moment, the markets are looking more risk on. However, if we just look at what's going on in the news, we can see that UK PM Johnson is promising a barrage of sanctions over escalation, and that's referring to Russia actually putting troops into eastern Ukraine. So they've moved over the Russian border into Ukraine, and now they're sort of defending the peoples that sort of affiliate themselves more with Russia. You know, they are Russian, and Russia's declared those regions independent, and that they're going to give them their full backing. Now, we've also got things like COVID still going on. The UK are just getting rid of all COVID restrictions in the near future, but anything to do with COVID has been sidelined. We're all concentrating on what's going on in Ukraine. So looking at the charts, now the hedge had been, with all the uncertainty, possible World War III starting, things like that, traders are buying into gold. Now we're seeing that come off, which goes along the lines with what we saw with the YouTrading.com Forex heat map. If we go to nat gas, now this is the April contract. Now Europe relies on 35% of its gas coming from Russia. If we look at a map, we can see here there's some pipelines that run across the whole of Russia, and they sort of go through the Ukraine. So we've got a few here going through the Ukraine, and they often end up in mainland Europe, but they also go down towards Turkey. We've got the Nord Stream pipeline here. This is Nord Stream 1, and alongside it will be Nord Stream 2. Now, the news is saying that German Chancellor Scholz is saying that Nord Stream 2 pipeline cannot go ahead given the latest Russian move. So that's bad news, really. We've got high energy prices. Whether or not this is going down, energy prices are going up. If we look at Brent, we'd seen that rising the last few days as situation around Russia, Ukraine intensified. That thankfully found the $96 per barrel and is coming down a bit. Still very much in an uptrend. Still very much looking like it wants to go to the 100. Going back to what's happening with the USD and the ruble had lost, over 3% yesterday against the US dollar. Again, moved into today, hit this 80, and we've seen, a bit of a pullback in the US dollar. So the Russian ruble is gaining a little bit of strength compared to, what could have been happening. For me, I absolutely thought that this USD ruble would have gone a lot higher, based on what they did do. So why is it slightly more risk off? Risk on. I think because Russia had already had troops in that area, they basically just sort of slid them across a little bit further, declared them as independent states, and obviously sort of made more of a point that Russia were going to back them militarily, economically, etc., etc. The fact that they haven't added more troops in any other areas, I think the Western governments, Europe, etc., even Japan, have said if they do another move, then they'll really go to town with the sanctions. For now, it sounds like they're just going to sort of give Russia a slap on the wrist. Russia just doesn't want NATO expanding to the east. Russia wants to protect anyone that sort of declares themselves as identifying as Russian. The markets were more uncertain than ever before, in terms of would it escalate into a bigger war. And now I think the markets are feeling like they are not going to see a war, and the sanctions aren't going to be as harsh as maybe was said by Biden and Johnson so far. So looking at the euro versus the pound, the euro was obviously going to keep declining if there was a war on European soil. We've seen the markets react to the sort of softer sanctions, I guess. I still don't think the euro versus the pound goes much higher. If you look to the left, this low from the 16th of February, that's been tagged now. We're in the 20 and the 50 EMAs. If we were to get above the high of the 16th of February and then get a close above the 84 mark here and the low of 10th of February, then I'd be sort of thinking, okay, maybe we go up to test the 200. This sort of sweep here of the double, triple bottom, if we look there, so this sweep here on the 3rd of February, maybe that was gathering some buyers. This was just confirming support and then going higher. But when you look to the left, you've got the euro versus the pound sentiment indicator on active trader. 85% of traders are trying to go long this. This is why we get these sort of big push up. They get a bit of relief. I think they swiftly move out of this position, either when they get stopped out or if they sort of see the light and just come lower anyway. So German DAX, we had a quick look at that. This could have been a look below, just to sort of stop everybody out from April 2021 till present day. If we get a close back above, based on the fact that sanctions aren't going to be increasing anytime soon, I think this was more of a look below and then back into the range. And then we've got this double top up here, which could be on the cards. If we look at euro versus dollar, again, the euro caught a bid when World War III didn't kick off with Russia going into eastern Ukraine. This could still find the 1.13 as support for a lot longer. We could go sideways for a lot longer. However, I would prefer to sort of see either a big move up now to towards the 200 EMA or a move down to this one spot 117. I don't want to trade it whilst it's here. With gold on a daily chart, we basically tested up to the 31st of May 2021 and we're coming lower. If we go down to an H4 chart, if we were to break this swing low here from 18th of February, 21st of February, so like yesterday's low and 18th of February's low, if we were to break that, I'd look to see what happens next. Do we get a retest continuation to the downside, or do we start finding some of these old support levels from previous resistance levels? UK 100, that was looking very bearish today, this morning. It seems that this swing low here, so if the high from the 27th of January 2022, that seemed to be the target for the bulls to step in or the bears to take profit, one or the other. We haven't got back above this swing high from the 21st of February here. So if we can get back above yesterday's high, then this is definitely a bull move. Otherwise, this could just be trading in this range between 7368 and 7500. So at the moment, we have to go with what we see. And all I'm seeing is risk on. So equities, whilst this is occurring, are probably going to go higher. And oil at the moment looks very toppy, as does gold. So not that I want to go short either the gold or the oil, but I might be looking to go long Aussie versus US dollar or something like that. So he's looking at Aussie use of dollar. If we were to get a pullback to a previous high, if we go back to the daily, so if we were to come back down into here, maybe around the 0.718 sort of levels, then that'd be good. On a 4-hourly chart, that might even not even get that far, might even just be down to the 0.72. So if we see a rejection of these levels, then I'll be looking to go along them. Okay, that's what I see at the moment. I hope you can make some money as well, and I'll speak to you again tomorrow.